morning, everyone. Happy Monday. Thank you for logging into Wanneroo Business Association's webinar on business continuity. I'll be handing over to our President, Dinesh Agarwal, who is the Managing Director of Fortuna Advisory Group. And we will also be bringing in Stephen Gethin, who's the Director of Fortuna Legal, towards the end of the presentation to add a bit of a legal aspect to the presentation as well. I'll hand over to you, Dinesh, to get started.
Thank you, Lauren. Good morning, everyone, and welcome to this webinar on business continuity planning, where we'll talk about how to maneuver through the COVID-19 crisis and prepare yourself how to survive and thrive in your business during this period. We will have a question and answer at the end of the presentation. So just to tell a little bit about WBA, as you all know who are connected to WBA, there's a lot of effort that goes in putting together all the webinars, and as you know, WBA has very well modulated and adapted itself very quickly to the new model of delivering the value to its members. So I'm just gonna a little bit intro about myself. I'm a chartered accountant and CPA with over 20 years of experience in Australian international tax and business advisory, business planning and strategy. I have won a few awards over the years, the Tax Institute, SME, the top 3 tax SME advisors in 2019, CPA 40 under 40, young business leaders in 2012 and 13. I'm the founder and managing director of Fortuna Advisory Group and the current president of Wanneroo Business Association. I'm also a small business owner like yourself and have a family with 2 boys. Just a quick a little summary about Fortuna Advisory Group. We are a multi-service accounting practice with 4 main divisions in tax and business advisory, financial planning, mortgage broking, and legal services, and have been highly acknowledged and awarded with a few different awards over the years, and the most recent being the best multi-service firm of the year at the National Australian Accounting Awards in 2019. All right, so we get straight into it. I'm gonna just briefly explain the key takeaways from today's presentation. So these are some of the action plans you can actually go and implement in your business straight away. And the first one is building a war chest, which is how you build a cash reservoir in your business to be able to sustain through this period. A cash flow forecast with a scenario planning, and I'll explain all that in more detail further in the presentation. How to cut back on your costs by analyzing them and sort of segregating them into various categories. A bit about the cash flow, how to manage the inflow and the outflow to optimize your cash flow during this period, and some of the other aspects regarding your asset protection, your estate planning, insurance policies to be looked at during this period, and a few other things which I'll talk in more detail. All right, just quickly, if you look at this slide over the last 4 decades, we have a trend of sort of a recession every 10 years. 1983, 93, 2002, 2011. And there's also a bit of a history of a pandemic, every 100 years. We had Spanish flu in 1918. We might not live to see another one in our generation in 100 years, but definitely we need to learn something from this crisis, that how do we prepare ourselves better than even if any kind of a recession comes in, and we are much more stronger and resilient in our businesses and how we face these kind of challenges. So the main structure of the presentation will be sort of divided into these 7 key areas, which I'll be sort of touching on and covering throughout the presentation. Cash, asset protection, your banking and funding during this period, how to work best with your management team and your employees and the staff, how to build on your relationship with your customers and your suppliers to work together during this period, and the general mental health of the business owners and how they're facing these challenges. All right, so scenario planning. Now, in our normal day-to-day business, we always talk about budgeting, cash flow planning, cash flow forecasting. We generally always have a predictable situation. We know, there's a normalcy, and we can predict some outcomes. And based on that, we do a cash flow forecast for 6, 12 months, or a budget for a longer period. But we now in an uncertain environment, and to have certain predictable outcomes is very difficult. So you need to do a scenario planning when you're doing your cash flow forecast. And you need to test it at various levels and prepare an action plan to deal with that situation, and have a proper backup plan for all those different scenarios. So, I would request, don't leave it to be, deal with it as it comes sort of attitude. You need to daily assess your cash flow, your weekly planning, your cash position to make the informed decisions. When can you need the extra bank finance? Are you going to have to prepare that in advance? As you know, your cash flow is an outcome of all the cash inflows, which is from your revenue, from your sales, your receipt from the customers, and your cash outflows, which is incurred on your expenses and other outgoings. So you need to, because your income during this period is going to vary drastically, and it's going to be hard to predict. You need to scenario plan yourself that at various income levels, what would your net cash outflow or net cash position could be, and how are you going to handle that situation and be able to survive with those kind of scenarios. So I'll give you a quick example here for a quick cash flow forecast with a scenario planning. So I'm just bringing up a quick spreadsheet, which is just a cash flow model. So you start with a basic scenario, which is, you're at your sort of optimum level, or if without any effect to your revenue. So basically at your 100% capacity level, as if the business was usual. And that will give you sort of a forecast of your normal revenue over the next 12 months, and your normal expenses, which sort of are categorized into various categories, like your fixed expenses and variable expenses. And I'll discuss that a little bit more in detail. And then you come up with your like a cash position on a month to month, and you can sort of change that to plan it on a weekly basis if your cash flow is going to be more volatile. Then basically you create few different scenarios that, let's say if your revenue was to drop by 25%, 50%, 75%, and how do you need to manage your various expenses at those levels of revenue, because your cash flow position is going to be totally different if your revenue or if your cash is not coming at the same level from your sales or from your customers. So you need to plan for those sort of situations, that if your revenue is dropped up to a certain level, now of course you can't carry your expenses at your 100% capacity, so you need to kind of have a backup plan that what happens and how I'm going to change, whether I'm going to cut down my staff in those various situations. You need to have those discussions in advance, have a backup plan for each kind of scenario to manage and maneuver that. So going back into the slides, now I'll sort of delve a little bit more deeper into how to optimize your cash inflows and cash outflows to get the best position with your cash balance. So there are various ways during this situation you can optimize your cash inflow. So we'll start first with the various government stimulus packages which have been announced recently. We got about 3 stimulus packages which have been announced. So this summarizes various benefits which are available to different kinds of businesses, or each of your situation could be different. So first of all is the cash boost stimulus package, where you can get 100% of your PAYG withholding on the salaries, which is lodged through your business activity statement. And depending on your monthly or quarterly, you can get up to $50,000 in the March and June quarter PAYG, and then that gets topped up with another $50,000. So a total a supplement of about up to $100,000, which would be available through your business activity statements in March, June, and September quarter. And there is a timeline how that becomes available. We've already covered that in one of our webinars in more detail, particularly on the stimulus packages last week, and the recording of that is available if someone has missed that as well. So and then if any of your businesses, you have apprentices or trainees, you can get a 50% subsidy on the wages of the apprentices up to a maximum amount of $21,000. That's based on the wages of 9 months from January to September. The next is instant asset write-off. So any of your businesses who are capital intensive, or who are looking to still grow and have the requirement to buy plant and equipment or machinery, or vehicles, or transport industry, if they need to buy trucks and things like that, you can buy assets up to $150,000 up to 30th of June 2020, and be able to write that off 100% as a deduction. So that's a big benefit for anyone who's looking to capitalize during this period. Then another boost is the accelerated depreciation deductions. So you can buy any asset and have a deduction of upfront of up to 50% of the cost of the asset, and that is in addition to your normal depreciation rules. So if you buy an asset worth $100,000, you can claim 50% of that, $50,000, as an accelerated depreciation, and the balance can go to your normal general pool or your depreciation schedule. And depending on the value of the pool, I mean, you might be eligible to write that off again under the instant asset write-off, or you claim the normal depreciation under the general pool rates or your normal depreciation rates, depending on whether you're a small business or not. The next is the JobKeeper payment, which has been announced last week as well, where there is a reduction of more than 30% in the revenue for the businesses with a turnover of less than $1 billion, or more than 50% for a larger businesses above $1 billion turnover. You'll be eligible for a JobKeeper payment up to $1,500 per fortnight per employee. Now, there's we'll touch upon that a little bit more later. There are still a lot of ambiguities around the eligibility for the JobKeeper payments, especially for self-employed structures like sole traders or businesses operating through companies, trusts, partnerships. There's some clarification that has come in the last couple of days, because there was a lot of ambiguity how the partnerships and trusts or companies would be able to claim, whereas it was quite clear in the fact sheet that the sole traders can go and register and nominate themselves, but there was not much clarity regarding the other structures. So we'll talk about that a little bit more later. Now, the next option available to optimize your cash inflows is whether you can delay the tax payments to the ATO. Now, you know, so you need to look at what are the essential payments you really need to make to keep your business going, and need to identify those payments. And it could be rent. I mean, if you're still operating from your premises, depending upon the nature of your business. I mean, a lot of businesses are operating from home, and there are some, and Steve is going to talk a little bit later about what options do you have under commercial leases and the moratorium periods which are being announced by the government. But let's say if you still have to operate through the premises, you continue to pay your rent, some of the essential suppliers like your contractors, your labor, your materials, which is essential to be able to continue your business activity. So, and if you can identify those at the front, and then then you have an options of what are the discretionary spending, what are the other payments which can be delayed, and even though ATO is your statutory obligation, but at this point of time, ATO is taking a lot of relaxed approach towards making payment arrangements. So you can definitely look at that. And in the next slide, I'll talk about that in a little bit more detail. But as a good practice, set up a separate bank account. Try to set aside your money for the GST, for PAYG, for tax installments, and create a bit of a reserve. Because if your normal cash flows are coming in, you probably need to put that money aside. Suddenly there's a drop in the cash flow, or you have any bad debts in the business, then you can dip into that separate bank account, which you basically creating a reserve for your ATO payments. But if you are able to get a payment plan with the ATO separately, it gives you a bit of a buffer to carry your cash flow fluctuations during that time in the interim. There's a caveat there. Make sure that you keep lodging your business activity statements and installment activity statements in time as per the due dates. And it's very essential for various reasons, of course, to get your stimulus benefits, and also to make sure that you're not getting caught in other penalty or general interest provisions for late lodgement, also possibly direct penalty notices, which is still in force. So just in this slide, these are various options available to get some relief with ATO in terms of your payment plans. And you need to talk to your accountant that what best you can get in your circumstances. You might have an existing ATO debt before your COVID situation, and you might already be in a payment plan. So you need to discuss with your accountant whether your new debt created during this period, along with your old debt, how you're going to manage that into a payment plan. So there's some of these options I've highlighted here. I wouldn't go into too much detail, but there are a lot of options available if you work with your accountant and in ATO in conjunction to get the best outcome for yourself. Make sure that you keep meeting your superannuation guarantee obligations, because there's no relaxation in that at the moment. I mean, especially under the cash boost stimulus packages, when you're going to lodge your March, June, and September basis, because you'll be getting a credit if you got staff and PAYG, that probably would reduce your debt or tax liability against those particular BAS periods. And if that results in a refund for those quarters, you will get the cash back from ATO. And there has been a clarification recently as well that, and we'll have to see practically how that happens, but if you have an existing ATO debt and you're on a payment plan, and your next BAS for the March quarter or the June quarter period, after getting the credit under the stimulus package or the cash boost, results in a refund, the position is that you might be able to get the refund back even if you have an existing ATO debt from your past liabilities and you're already in a payment plan. This, we need to practically see how ATO will handle that, but this is the view so far, that you should be able to get the refund because the intention of the announcements or the stimulus package is to give you cash support through this cash boost plan. So you still have the option to be able to use that cash to pay off your past liability, because ideally you want to reduce your debt during this period as much possible. But if you are in a really cash flow crunch situation, you have that option to be able to use those refunds to survive your cash flow problem during this time. Now, coming to the costs or your outflows in your business, you really need to, segregate them into various categories. And first of all, you divide them into your fixed and variable costs. Your variable costs, get normally automatically modulated based on your sales activity, because if your sales is going to vary, probably your casual labor, your contractors, your materials, which you're going to consume to generate that sales activity, you can adjust the level of that. But your fixed cost or your overheads doesn't vary with your sales activity. So you need to really drill them down and look at what are the essential, non-essential kind of fixed costs, uh, and which are the ones which you can reduce. So any non-essential fixed costs, of course, you need to get rid of them straight away. And any essential costs, which of course you can't really get rid of them, because they are very essential to continue your business. But then there could be certain expenses which are more discretionary, or you can reduce the level. They're subscription based items, and some other expenses which you can adjust the level, like for example, the rent during this period. You could have some options to, if you work with your landlord, to reduce your rent or outlay during this time, and some of the other costs, which if you look into more closely, I'm sure you'll be able to segregate them into various categories, and make the best, make a plan to tackle them in the best way. And also, one important factor, I mean, a lot of businesses don't really draw a wage from their business. So you would know your wage is going to be drawn out of your normal profits, or basically anything, your residual after taking all your costs out of your revenue, that's going to drop in the bucket, and that's where you're drawing your personal wage, or drawings for yourself. You need to make sure that you factor that in, when you're looking at your cash flow forecast or a scenario planning, that how much is available, or how much you going to be able to draw as a wage as a business owner for your own personal financial situation and your survival. Um, Now I'll talk a little bit more about the bank finance, and various things you can do with your bank finance. Of course, the first of all, you need to contact your bank manager as soon as possible, and try to arrange for additional banking facilities or lines of credit. Um, Even if you try to start the approval process now, so that you can use that in an emergency, even if you don't need to draw straight uh, against those loans, because as you know, it takes a lot of time through the whole application process. It's not just going to be overnight that you knock your bank manager's door and you'll be able to get a facility. So allow for at least 4 or 5 weeks to have any facility in place. So it's very important that you do that planning. There's various sort of support packages which have been announced by the government as well, to for the banks to facilitate the business owners. There's a $250,000 unsecured loan, which is 50% guaranteed by government, and you should be able to utilize that suited to your circumstances. But you need to talk to your mortgage broker or finance consultant, or your bank manager, because they have not. There's not a full-fledged product which has been released by the banks yet, but generally the view is that they will look at your basically feasibility of your business, and if you were already a struggling business, it's less chances that you will be able to get finance under that category. But if you you were already a business which was doing good, and COVID has really hit you, then if you're looking at pivoting your business or changing your business model or spending on marketing or things like that to basically change your business model or continue your operations during this period, they'll probably look at it a little bit more positively. The other options are that you can, defer your existing bank finance facilities, your principal repayments and the interest for up to a certain period, depending on, and there's a bit of a, a consultation you need from your finance consultant that whether you should or should not be deferring the installment. As you know, the interest is still going to be continue to be capitalized during this period. So there's a compounding effect. So make sure that you discuss in detail with your consultant to make sure that you're getting an optimum result. There's some alternate funding arrangements in the market. There are some finance institutions who provide short-term lines of credit and based on the cash flow of your business. So again, try to explore those opportunities if you are not able to secure a proper finance facility from the main lenders. All right, so a little bit more about how you can optimize your cash inflows and outflows. Look at your accounts receivable in more detail. Talk to your customers. See if you can, try to expedite the payments as our people are still trying to or able to manage their cash flow properly. So work with your customers to try to get the payments sort of sorted out as soon as possible. Talk to them about the confirmed sort of expected dates of the payments. If if you don't, normally most of you will have a standard payment terms, but you don't get paid in the standard payment terms. So in this time, it's very important, because for you to forecast your cash flow, you need to work with your customers to determine the dates when they would be paying you, and if the payments are getting delayed, try to chase that up on a regular basis. Of course, you need to manage the relationship sensitively with your customers and clients, but don't hesitate in doing more regular follow-ups, as you usually wouldn't in normal circumstances. But everyone understands we are all in the same boat at this moment, and we have to support each other. So all the suppliers and the customers need to work together to manage everyone's situation. Look into your plant and equipment. If you have any obsolete or any idle equipment, sort of lying around, and you really are in a cash flow struggle, see if you can dispose of some of the equipment and try to generate cash. That's one way. Look at sort of liquidating your stock. Turn that around as fast as possible. There's no point your business running out of cash in a month, but having a large amount of stock in hand piled up, and if your business goes in a liquidated situation, your liquidator is going to sell that stock at a fire sale price anyway. So look into inventory more closely and see which are the items which are not moving. If you want to dispose them off or get rid of it at a discounted price, try to do that. Try to optimize your cash situation as soon as possible by taking those sort of steps. Then a few more items on optimizing your cash outflows. Of course, the rent is the first thing. Try to negotiate with your landlord if you don't have to work from office or from your premises if you don't need them for a certain period of time. Try to negotiate a rent-free period or a rent reduction for the next 3 to 6 months. As I mentioned, there's been an announcement by federal government on the moratorium period if there's a default in the rent payment, but we're expecting a little bit more direction, I think, on that soon, whether there's any forced implementation. And on Steve will talk a little bit more about the commercial leases towards the end of the presentation. But at this point, if you work with your landlord, most of them are taking a favorable sort of a view on it. But you could be a landlord as well during this situation. So it's really hard. But if this moratorium during this moratorium, and also if they're with these announcements on whether the rates and taxes and things like that could be deferred, you need to pass those benefits to the tenant. So they have to work in close conjunction to be able to get the best outcome. Any fixed term contracts you have with your suppliers, so you need to talk to your supplier. If you really can you come out of that contract by a mutual discussion, whether you can pay a small sort of a fee to break the contract, or you can go into on a month to month or things like that. So so that you don't have that a burden on you that you have to meet that fixed term contract. And depending on the nature of the business, this could sometimes be serious repercussions. And there's some other sort of laws which have been announced under insolvency and debt collection and things like that, but there are still some contractual laws which could have implications. So try to talk to your supplier first and see if you can relax certain terms under the fixed term contracts. If you have issues, talk to your solicitor. How can you sort of have any ease out options under that. Your supplier terms, again, in the same context, whether you can relax the supplier terms, whether your normal 7 to 14 days terms, can those be extended to 30 days? As you know, if you are in the shoes of a supplier, they have the same problem that they need to work with their customers to get the best cash outcome in keeping the cash flow going. So again, I think it's you have to work mutually in this situation. So so to get the best outcome. Reduction in the cost, we've discussed that earlier, that you just look at it a little more closely. We've already touched on that in more detail earlier. Your loan and lease payments, again, if your normal banking facilities, your mortgages, your business commercial loans, and your personal home loans and things like that, work with your banker, work with your mortgage broker to see what should be the ideal solution in your case, and then try to put a plan in place. Just don't act just based on media announcements and just reading a news that, okay, well, it's a wise idea to go and just defer everything. You need to consider your personal situation, your personal cash flow. Some of you could be in already fixed sort of interest periods, and you might have to break. There could be advantages in breaking your higher rate fixed interest mortgage, and then there would be a break fee possibly. And but there are still advantages if you can come into a much reduced lower rate. So you need to evaluate those options as well. All right, so just touching a little bit on protection of your assets. I won't go too much in detail, but and the timing might not be in favor, but generally, I mean, in your business, you should be working with your accountant to have the best asset protection in place. But there might be still some options you can do, in terms of protecting your family home or your personal assets. But you need to talk to your solicitor, what are the options available, or your accountant to see, you still have any option to be able to make any modifications in your structure to be able to protect your personal assets. Coming to estate planning, I mean, of course, if you haven't done that already in the past, you haven't, and normally a lot of people always, delay this till it becomes necessary to have your estate planning sorted. Have a will in place, having enduring powers attorney in place. It's very crucial, and it's not that the death rate under COVID is very low, but it's not about sort of anticipating that situation. It's about what could sort of cripple you, that you are stuck in a situation where you're not able to operate your business and you're not able to provide an authority to any of your family members to be able to continue the business. So make sure that you try to put power attorneys in place, enduring power attorneys in place, so that if you are in any kind of a situation where you're not able to operate, you can pass the control of your business to one of the family members or to your business partners to be able to continue. Fortuna, can help you to sort of turn around the wills and enduring power attorneys sort of within a week, and of course with your other solicitors and accountants. I mean, I'm pretty sure that these days that service should be available to be turned around very fast. So do consider that. So that was generally a little bit about managing your cash flows and optimizing them, because that's the key element in being able to continue your business, because it's more from the survival strategies. And I'll touch a little bit about some of the other aspects about how you have to continue your business, or from the planning perspective. Some of the employee policies. So of course, most of your employees, they could go in financial hardship as well if they lose a job. So, and as a business owner, of course, you want to try to keep your staff and help them during this situation as well. But if your business can't survive, you need to work with them. How are you going to be able to work together so that the business can sustain as well, and the staff can sustain financially. So whether you need to reduce hours, whether you could be one of the businesses which is in a stand down situation, and then in that instance you might have to stand your staff down as well on unpaid leave. But now, considering the JobKeeper payments have been announced last week by the government, that's going to support a lot of those businesses or industries where whether if they have to stand down their staff, whether they can use them still in sort of remodeling their business on a reduced hours, so that they continue to get the JobKeeper payment and still are active in helping the business owner to implement certain things in remodeling their business. Or if the business can't operate at all, then of course you still have the opportunity to keep the staff on your payroll by getting this job seeker payment from the government. And at least that way, when you are back on track in your business activity, then at least you don't have to go and start the recruitment process again. So work with your staff, work with your team to develop the best solution. In this instance, everyone is quite sort of accommodating all the situations, and so make sure you have that discussion on a regular basis. Insurances, a lot of businesses don't have a business interruption insurance, so just check with your insurance broker just in case you have any of the policies which you had a business interruption insurance inclusion and you're not aware of it. So make sure you're not missing out if you already have that included and you've been paying for that. So a lot of times it's possible that you're not even aware that what sort of inclusions you have in the policy. So there's possibility that you might be able to claim something on that in the business interruption. You could be maybe eligible for income protection depending on your policy and the inclusion and your situation. So consult your financial advisor if you have any sort of mental health stress situations where there's a trigger for the income protection policy. So coming to your sort of working with your team, again, just to touch upon certain things, try to have an open communication with them on a regular basis, keep them apprised of what's happening, with the business, what's going on in your mind, what are your plans. It's very, very important that you keep them in the loop. Discuss with them, depending on the nature of your business. If you're in a service-oriented business, just explain them clearly what would be the policies with having sort of customer or client meetings. If you can't, most likely you won't be able to meet your customers in person, then how you're going to have sort of online meetings. And most of the businesses have adopted to the online technology to be able to conduct the meetings. And but some of the businesses might have some staff who sort of are not very good in the technology, so you need to make sure that you help them into sort of transition into that sort of a phase. Set your productivity goals very clearly. It's very easy for the productivity to drop during this period for various reasons, working from home, distractions. So it's very important that you have regular meetings, you set the goals, you set the productivity targets, and you sort of monitor that closely. Use of innovation and technology, of course, we've touched upon that. Your health policies, if you're still operating from the premises, make sure you put good systems in place for hygiene and health of your employees and your customers who are attending the premises. And it's clearly outlaid. You put notifications on the premises that what sort of policies you are adapting for hygiene and safety. Policy for staff who becomes unwell. Again, if you could be operating from the premises or working from home, but you need to have a clear communication on the staff who get sick during this period, and that could be due to COVID or due to non-COVID situation. And but generally, if they have to isolate themselves or they need medical attention, then what would be your policy regarding leave and things like that. So take advice on your HR consultation in that regard. Then generally, just of course, all the measures we all sort of reading a lot of information on how to reduce the infection risk, how to monitor your health, and there's a lot of tools and sort of articles who are coming out that best practices for working from home sort of a situation. And I'm pretty sure most of you must be reading a lot of these articles these days as you're adapting these sort of new business models. Now, just a little bit about the leadership and the leadership style that sort of you need to adapt as a business owner during this period. I mean, we are in a totally different world. We're not used to this before. It's it's new for everyone, and it's important that we, as a business owner, set some example during this evolving situation. And you need to adopt a certain leadership style to move your team through this. So create just a few tips there. Create a central and clear list of priorities. Centrally set out a clear set of priorities and try to locally implement them with a high degree of local manager autonomy. So hard choices need to be sort of made. Never sort of more so than during a crisis. So keep those choices, keep the priorities clearly set, and convey that to your team. Pursue a non-binary approach to problem solving. Now, this is just this is what I call opposite to a teenager approach to problem solving. It's not a clear sort of yes and no answer. It's not, just making a decision, we break or we stay together. It's about looking at more sort of closely and seeing if there's not a clear answer. Just take an example of your staff. Let's say, it's not about you either fire them or you keep them full time. It's about, what alternate arrangements can you make. So just try sort of a non-binary approach to how you can solve problems. So think differently, think out of the box, and try to find a solution. Be honest, empathetic, have a clear, honest, empathetic, and simple approach to the communication as COVID sort of 19 situation. There's a 10 by 10 10 10 rule sort of applies, which says something said 10 times in 10 different ways for people to be able to retain 10%. So you need to communicate more regularly, more often, in a clear, concise way to your team. And sort of there's no harm in repeating because you need to filter through and get the message clear. Write down the stories. Of course, I mean, there's going to be a lot of heroes and examples of success during this time, as some of your staff who's going to be really setting some examples on helping you to getting your business during this crisis. So make sure you don't miss those opportunities to capture those stories. These are some of the things you're going to be remember and celebrate when you come on the other side of it. Just quickly on, we've touched, during the cash flow part of the presentation on how you need to work with your customers and clients. But again, just you need to communicate to your customers if you're still operating from your premises about your safety protocols. Try to identify your key customers and work with them more closely. Give them make sure that you tell them that you're still available and to service them and help them. And if they are struggling, try to provide them as much value you can, and work with them to get a solution. Forward purchases, see if some of your customers are still doing good, and if they can help you with your cash flow by making some advanced purchases, or buying some goods and services, or paying you in advance for your sort of services to be delivered, or goods to be delivered later on. And that could happen. I mean, if you look at your client base or customer base more closely, you might find some of the businesses who are still doing really good, and they'll be happy to help you during this time. And of course, put more efforts in marketing, in just being in front of your customers a little bit more. If you have alternate sort of delivery options available, or a different product or service you have introduced during this period, you make sure that you convey that to your customers wisely. Similarly to your suppliers, of course, you need to communicate to them in this situation as well. I mean, whether how your business is performing during this time, and what support do you need from them. Alternate suppliers. That's normally. Normally you need to have you want to maintain the relationship, so you just want. Go away from your supplier just because of you can get a cheaper option. It's if your supply chain is disrupted because of the transport. Let's say you get your material, or your suppliers are interstate or overseas, and they're delivering goods, and you can't get that. So make sure you make an alternative arrangements in your business, so that your supply chain, if it's disrupted, how are you going to continue your business during that time. And also essential to identify if you are in one of those industries where your stock levels could be affected because you won't be able to get the delivery of your supplies. make sure that you try to arrange that sort of in advance, or you try to build up the stock inventory levels. I mean, of course, we, all of us are going through a stressful period, and not only the financial position, but mental health and well-being, just generally across as a business owner, along with our staff, depending on how this has impacted us, is having sort of various sorts of impact on our health. So make sure you access support during this period, and and try to maintain a practical and a calm approach. If you're experiencing really financial hardship, you can contact the National Debt Help line as well. Seek support of your family, friends, keep in good contact with them, close contact with them online, and sort of share thoughts and ideas, and try to maintain your sort of mental health and well-being in a positive way. Also take, just building back into foundation, basically, take this time when, when your normal business activity has declined and you have more time available to you, and if you've still got your staff, a lot of capacity available because of the reduction in the activity, you focus more in building systems, processes, look at your pricing strategies, look at your marketing, branding strategies, try to work on the fundamentals of your business, try to reset your goals, objectives, the direction your business is going to take, either during this period or as you come out of the COVID situation in few months. So it's possible that your business might have totally remodeled during this time, or might have introduced sort of additional lines of services, and you might have a growth spur in the business when you come out on the other side. So make sure you spend a little bit of a time in focusing and reinforcing your systems, processes, and your marketing strategies. Again, a lot of different opportunities might emerge during this time as well. Digitalization of the products. You might expand into different sort of products, different markets. There's various diversification opportunities might be available, which you might not have thought earlier, but as you put through a lot more thought into your business model, you might see that you might be able to sort of diversify into a lot of different areas, which can give a new direction to your business. A lot of collaboration opportunities might emerge during this period as well. Like there could be complementary services. If sharing ideas with other business owners, you can cut down the scale by reducing the overheads by collaborating. Even in the same line of services, you can reduce your overheads by collaborating or having some mergers, and operate the business more efficiently. So, explore, as many opportunities or options you can, because, the businesses are going to operate a little bit differently, even if we come out of when we come out of this COVID situation in a few months' time. I don't think the world and the business world is going to look like same. People are definitely going to focus a lot on efficient operations. So see where the collaboration opportunities are. And some of the businesses that come out much more stronger. I mean, there are some industries which are really, really thriving. Look at IT, anyone who's in digital technology, and they will have an increased pressure because they need, more capacity, they need more staff. But at the same time, they would need a higher cash flow to be able to sustain that growth during this time and even beyond that. So Again, you need to look at your situation, whether you have the funding available to be able to take your business during this growth phase, and whether you really want to grow to that level during this time, which suddenly, in few months, the activity might reduce again. So just take a balanced approach and do proper planning in that regard. The marketing, strategies, of course, the whole marketing world is going to look a little bit different. I mean, the online digital media or digital marketing world is becoming very noisy as well. We expect some of the traditional marketing models might revive, and that could be some sort of normal traditional media going back to the paper sort of marketing. But some of those models could emerge as well again in the next coming months. And so, but you need to be specific in your message, and then you need to have sort of fixed price modeling so that you get a clear message to your customers, because people don't want uncertainty during this period. So try to be at the forefront, try to build your brand, try to reinforce your marketing activities. Just very quickly, I think we're running out of time, and I need to allow some time to Steve to cover on some of the aspects on the leases and stuff, and then we need to have some time for the question and answer. Just very quickly, I touched upon that a little bit earlier, that there's a lot of still ambiguities around the delivery of these tax benefits or stimulus packages under the cash boost and the job seeker payments. We are still getting clarity, as there was not a lot of things were not clear from the fact sheets last week. But just I'll touch quickly on the self-employed here, that till last week there was a lot of confusion whether the self-employed would only cover the sole traders who can go and register themselves or expression of interest with the ATO, and they need to nominate, a person which a sole trader will nominate itself for eligibility for the JobKeeper payments. There's a lot of ambiguity regarding other structures for the businesses who are operating under the partnership trusts, companies who could still be a sole trader, or, as we know, a lot of small business sector, even one-man shows, they operate through a trust or a company or a partnership, or they could or could not have employees. But what would be the situation for a business owner? There's one clarity, which, I mean, it's already also available in the business.gov website, that the companies who are paying dividends or trusts making distribution to the beneficiaries and the partners could be able to nominate one person to be eligible for the JobKeeper payment. But that's still very unclear, because you could have a partnership with two unrelated people running a business. If you nominate one person, it's very hard that what would the other, and which partner are you going to nominate, and how's the other one going to be compensated? And similarly, in a company, you might have multiple directors. So there's still a lot of confusion, but we are expecting, as the bill goes through the parliament, we will have more clarity, and we will be releasing further information as it comes along. And of course, WBA is releasing a lot of information as it comes through. You can always visit Fortuna Resources page on our website to be able to see any clarifications which will come through. We are releasing on a regular basis. I'm going to quickly pass on to Steve, who's now up on the screen. He will quickly cover a little bit about employees and what happens if you have to make them redundant or you have to stand them down. And also he's going to quickly cover a little bit about the leases and what is the situation, or what is the legal position regarding the commercial leases. So, and then we will be able to go into question and answers. Over to you, Steve.
Thank you, Dinesh. And just some brief background on myself. I have over 20 years legal practice in a range of different roles, from large national firm to in-house counsel in several ASX-listed companies. And since 2016, have been a part of the Fortuna Advisory Group, advising small to medium business owners on their structuring, tax issues, and contracting, etc. So it's, as Dinesh has said, it may well be the unfortunate case that you need to, you have too many employees now, given the dramatic economic downturn. So you need to still deal with those employees in a way that's compliant with Fair Work legislation. There's going to be a lot of employees just sort of sent home, or perhaps put onto reduced hours or changed duties. And look, in practical terms, we're not expecting that many employees are necessarily going to exercise their strict technical legal rights in relation to anything that might not be done perfectly, but you just need to be aware. You may have a difficult employee who may, take gratefully what you're trying to offer them now to give them some sort of an economic reward going forward, and then they might, get nasty later on and run off to Fair Work once everything's settled down. So, although having said that, there are some fairly short time limits for unfair dismissal claims. So basically, if you're a small business, that means you have less than 15 employees. You don't have to pay redundancy payments unless your employee is covered by an award which says they are entitled to a redundancy payment, even from a small business. The 15 employee test is a little bit unfair, because if you had two part-time employees each working 20 hours a week, they're not counted as a single employee, they're counted as two separate employees. And in fact, a casual who's had systematic and regular work is also counted as an employee. And you'd be quite surprised how irregular and unsystematic a casual's work can be before and Fair Work still treats them as a regular systematic casual. So if you're not sure whether you come under the 15 employee test, give us a quick call and we'll help you go through that. You need to, when making an employee redundant, and this is whether or not you're a small business, whether you're a small business just makes you not have to pay the redundancy payment. You still have to go through the redundancy process to avoid an unfair dismissal claim, although again, the standards that you'll be held to are slightly more relaxed if you're a less than 15 employee small business. So you do need to give the employee a written notice at the earliest opportunity that their position is likely to be made redundant. That notice needs to say that you'll consult with them. So you'll explain to them why, even though it's pretty obvious, you still need, in this particular climate, you still need to go through what is the specific facts about your business to make that redundancy case. If there is an alternative part-time job you can put them on, you need to offer them that position. You can't just cut their hours. If you're wanting to transition an employee from a full-time role to a part-time role doing the same thing, that is technically a dismissal from a full-time role and the offer of employment in a part-time role. So if you actually just say, okay, Mr. Smith, your hours are now reduced to 20 hours, full stop, you've actually dismissed them, and because you haven't been through the process, it's probably going to be an unfair dismissal. So what you need to do is you need to give them a redundancy notice saying, your full-time position is going to be redundant, but guess what? We happen to have a position doing exactly the same thing, 20 hours a week. Would you like to take that? You get them to sign up, and then you're clean. You've dismissed them, made them redundant fairly, and you've re-employed them in a new role. Now, some people, their business can do that. Other people, if you're in some sort of hospitality business, for example, you simply don't have maybe anything at all that they can do. So in that case, you're allowed, you don't have to make them redundant. You've got an alternative. It's stand them down without pay under Section 524 of the Fair Work Act. So again, you send them a notice saying why. That needs to be for a reason beyond the employer's control, acting reasonably. Now, in this market, obviously, a lot of employers have people who've got nothing to do, and it's not the employer's fault. So you send them a notice, you stand them down without pay. You can try and state how long you think it will last, but in practice, no one really knows. So you just say in the notice, okay, we'll keep this under review. And as soon as it becomes apparent that it's possible to resume your job, although there's no guarantee of that, you'll be restored to full pay, or if necessary, if your full-time job never comes available again, we'll look at whatever alternative redeployment we can offer you. And then you can, if you're standing them down completely, they're still on your books as an employee, so you still qualify for the $1,500 JobKeeper payment for them, so you can still make that payment to them. Now, what it becomes tricky is some people might think that, okay, there's nothing this employee can do in their ordinary job, but I've got a bunch of rubbish out the back of the office. I need someone to work on a week or two cleaning that up. They might as well do that and earn their JobKeeper payment. If you're doing that, you've actually made them redundant from their first job and given them a new job. So you'd need to go through that redundancy process and re-employing them on a new role if you wanted to try to get some value, because you might think, okay, they're getting $1,500 a fortnight. If they're just at home doing nothing, we've got other tasks that are not really their main job, but we'd like that done while this downturn. We'll clean up these jobs that have been put into too hard basket or put off, get some employees on JobKeeper to do them, make sure you make them redundant and put them on new roles. And, redundancy is sort of a harsh technical term. You can always couch your email, your notice to your employees in friendly terms, saying, look, we're going through this technical process under Fair Work because we've had legal advice that we're required to. Really what we're trying to do here is look after you in the best possible way while complying with the law. And, obviously, as soon as there's a full-time job for you, it's our intention, although no legal guarantee, to restore you to that and pay you as much as we can using any government supplements in the meantime. So that's the way to manage your keep on good relations with your employee without sounding harsh and legalistic, but you do need that core legal content in your communications. Rent, obviously, probably the great majority of small business people are renting a premises, and although some of you I know would possibly be landlords and maybe on the other side of this problem. So the state and federal governments have jointly announced, and they've been repeating this regularly, that there will be a moratorium on evictions for rent defaults for 6 months. Now that's up to the states to pass laws to implement that. So far, only New South Wales and Tasmania, as far as I'm aware, have done that. Western Australia is going to, but we don't even know a date. We haven't seen a draft law yet. And the government has stressed that that's based on capacity to pay. What the government is doing is before that moratorium takes effect, the government is encouraging landlords and tenants to sit down and discuss how much rent can the landlord, can the tenant afford to pay. Obviously, if your business is doing well, then the government's saying, well, don't try and leverage this situation to try and get out of rent. So you need to probably be open and honest with your landlord, disclose what your capacity to pay rent, if any, might be, and ask for a rent reduction. And ideally, that would be documented. Again, this moratorium, it's not clear that you'll get out of the rent. It may just accumulate. You'll therefore need to try to pay it off somehow after the moratorium ends. The moratorium at this stage has just been explained as a prohibition on evictions, not necessarily as an extinguishment of the rent liability that accrues over that next 6 months. We don't know the detail of that. There may be some provision to at least validate any agreed rent reductions to make them legally binding, just in case the tenant and the landlord haven't gone through proper documentation. So there's various on the screen links. These links change sometimes daily. So before you make a decision, please recheck, re-click the link and see if it's updated. And always feel free to ask Dinesh or I or any of our other staff legal or accounting questions related to Corona. And obviously we are doing our best to provide as much information as we can free of charge. I mean, if you have a specific technical implementation relevant to your business, it may be a paid job, but that can be discussed. And obviously feel free for a no-cost consultation on any of these issues to see what your circumstances are and how we can help.
Thanks, Steve. Lauren, we still have, I know we're going a little bit over time. We still have a few minutes for the question and answers.
Yeah, that's absolutely fine. It's obviously an open session, so if anyone did need to leave the session, they can. The recording will be in the Facebook group for those of you that need to shoot off but wanting to catch up on the questions. So just for the attendees that haven't already sent their questions through, you'll have a Q&A button at the bottom of your screen. If you click on that and you have got any questions for either Dinesh or Stephen, just type it in there whilst we're answering these and we'll make sure that we answer them before we go. There's a couple that have come through, it's mainly looking like they're more for yourself, Dinesh. Yep. How do we undertake an accurate cash flow forecast given this is a fluid environment and we're unsure how long it might go on for?
Yeah, so as I mentioned earlier that you won't be able to accurately predict your cash flow during this situation. That's why you need to do the scenario planning. So the best you can do in this situation is to model it at different levels of your revenue prediction, and then see how can you manage your cash flow by having to manage your expenses at those various levels. So it's not going to be able to be accurately predict. So you need to do as many scenarios you can and prepare a backup plan during the situation, because it's better to having a backup plan to address that situation rather than leaving it to be, to cross the bridge and when we get there kind of a situation, because then you might be in a real distress situation.
Yeah, cool. There's another one, after a bit of advice for business owners that are in sectors that have been forced to close their doors and are unsure when they might open again, especially when it's unknown as well how long it might last for.
Yeah. So, I mean, of course, those are the businesses which are at the front line and being affected the most. So the best for them during this time is to make use of the government stimulus packages. I mean, under the previous or the cash boost package, I mean, it's purely based on the wages of the staff and the PAYG withholding. So you might have some during this March quarter, which will help you to give you some cash, because most of them you would have operated January and February or March, sort of half of the month your staff might have gone on a stand down and then have no wage and PAYG. And then April to June, that might go down. But based on the March quarter batch, you'll be able to get a cash supplement, and then it's going to be topped up with another supplement in after June, in July to September period, based on how much you've claimed in your March and June period. But then after this JobKeeper has come in, that's going to help you to keep your staff at a minimum pay of at least $1,500 a fortnight. And that is still taxable to the employees. So when you're going to withhold tax on that and pay your staff, you still would have some PAYG withholding on the wages, which will go in your June quarter batch, which will help you to still get a portion of the cash stimulus, cash boost stimulus. And at the same time, you being self-employed or as a business owner, if you're already drawing a wage, you'll be getting at least the minimum JobKeeper payment as well. But if you are self-employed in one of the structures, as I mentioned earlier, you should be able to fit in one of those categories to be able to draw at least a minimum JobKeeper payment for yourself as well. So that's probably the best scenario for the business owners in that kind of business to be able to sustain during this period.
Yeah, and I guess whilst they're during that period is to be focusing on the business and what they could be doing, instead of, I guess, doing what might be easy for some and burying your heads and taking some time out, which is important, but there's things that people can be working on during this time as well.
Yeah.
Someone's asked, best way to prioritize staff when building your business continuity plan?
Yeah, so I think you need to look at your key personnel. So who are your essential kind of employees, which are very crucial to your operations, even when you have to sort of continue business on the other side of it. So of course you want to keep those staff. I mean, you need to have a conversation with them, and some of the businesses might not be able to afford at all. But with this JobKeeper payment, I think it should help you to keep your staff at least on the payroll, because if there's no jobs in the market, most likely they, it would be hard for them to go and find a job. So if you keep them on the payroll with the minimum payments, at least as the business revives or the operations ramp up, you can then start bringing them on full time. But if there are non-essential staff, some of the casuals, of course, you can let them go first. And I suppose this is the best you can do in terms of categorizing your staff into essential and non-essential, and to make a decision based on that.
Yeah, there's just one last question left. So if anyone did have any questions they're thinking about, just pop it into the Q&A button at the bottom and we'll make sure that they get answered. But the last one, should we be focusing on scenarios when they're putting the business continuity plan together?
Absolutely, and that's what I've been stressing on generally throughout the presentation, is that you need to do scenario planning. A straight cash flow budget or a forecast is not going to work during the situation. So as many scenarios as you can sort of prepare, of course, as a business owner, you're probably in a best position. There's a lot of uncertainty, but I mean, you are the only one who's in the best position to analyze. Talk to your customers, talk to your suppliers, see what sort of activity you are expecting from your customers, because sometimes, you could be a little bit blindfolded saying, oh, well, I mean, everything's doom and gloom and my business is going to, shut down. My customer's not going to give me any orders. But unless you reach out to them, you don't know each of their situation. Yes, if you're in a retail, if you're in a transactional commodity-based business, it might be a little bit more difficult. But if you have regular clients, regular customers, there's no reason why wouldn't you have conversations with them and ask them what their personal situation is, because that will help you to put your scenario planning in place. That you maybe your 60-70%, you'll be surprised, 60-70% of the businesses might still be business as usual or very less impacted. I mean, we had another webinar last week and we did some poll questions, and surprisingly, there was a good percentage of the business owners who were attending the webinar. They had business as usual, or maybe impacted 20-30%. So everyone is going to have a different customer base. So make sure you kind of try to analyze that to do your scenario planning.
Cool. Thank you, Dinesh and Stephen, for your time this morning and for sharing your information. For the attendees, I do encourage you to make note of the contact details there for the team at Fortuna, and for anything that they've mentioned this morning that you've got questions on, we encourage you to reach out. If you don't make note of those for whatever reason, let me know and I'm more than happy to connect you. But that will be it for today's session. We'll be back online during the week for some of our online Business Boost networking sessions, and we've got more webinars coming up over the next couple of months. So we look forward to seeing you online again soon. Thank you.
Thank you.